How's it going, everybody? Chris here at Digital Asset Connoisseur. Today on the show, we're going to take a look at the markets as well as a couple of stories. The first one looking at some possible cryptocurrency regulation. We're also going to take a look at Blockfi bailout, give you an update on the Celsius network, and then the final story is going to be about Bitcoin going to zero. As always, the opinions expressed in this show are my own and are intended for educational purposes only. They should not be taken as financial advice. Make sure you're doing your own research and staying safe. Let's get it. Taking a look at the markets today, we've got the total market cap at about $961 billion, so almost back up to that 1 trillion mark. We got Bitcoin hovering around 21,400, up about almost 1% on the day. We got Ethereum sitting at 1,235, and it's up about 28% over the last 7 days. As we go down the list, we're going to skip over the stable coins, taking a look at BNB. It's at $238, and it's up about 23% over the last 7 days, as well as XRP, 36 cents, up about 21%. Cardano, again, like yesterday, kind of hovering around that 50-cent range, just seems to be kind of consolidating there. It'll be interesting to see if it can hold that, if it goes above, or if it breaks down here into next week. Solana, $41.39, up about 36% on the last 7 days. Again, I think kind of the hype around that phone, and it had just had a pretty massive sell-off the weeks prior, kind of leading to some of that rise. Let's go ahead and look at the first story here. So this comes to us from Cointelegraph, and it's a story covering some comments that the SEC chair, Gary Gensler, recently made. And the comments that he made were specifically about the CFTC, which is the other kind of regulatory body. And before we jump into the story, I kind of want to look at what the CFTC and the SEC are, just for context. So depending on how these cryptocurrencies and digital assets are categorized, one of these two regulatory bodies will kind of have authority over them to kind of enforce and maintain kind of the different regulation that will come to pass. So when we look at the CFTC website, I just went ahead and went there just to take a look at their mission statement. The mission of the CFTC is to promote the integrity, resilience, and vibrancy of the U.S. derivatives markets through sound regulation. Their vision is to be a global standard for sound derivatives regulation. When we jump to the SEC's website, the mission of the SEC is to protect investors, maintain fair, orderly, and efficient markets, and to facilitate capital formation. The SEC strives to promote market environment that is worthy of the public's trust. So up to this point, Gary Gensler has been very adamant that cryptocurrencies and digital assets are going to fall under the SEC's regulation. And so this is really the first time that we've heard of Gary Gensler or anybody really try to have a joint authority over these cryptocurrency assets. And with this, he's recommending, maybe the SEC and the CFTC will both have some kind of an understanding where, depending on how a specific cryptocurrency is categorized, that they both or one or the other might have regulatory authority. And again, up to this point, it's really been a tug of war on who's going to have that authority. And when we look at why, down at the bottom, they got a couple notes here. This is from the Financial Times. It cites that blockchain analytics company Elliptic has said that U.S. regulators have collected around $3.35 billion through enforcement actions in the crypto industry over the years, with over 70% of that sum going to the SEC. So this money that is being collected, it's going to go to one of these bodies most likely. And as you can see, it's a quite large amount of money. So whoever gets the authority to regulate it are going to have a lot of additional funds through this regulation for their different bodies. So kind of gives us some perspective on why it's important to them Some of the more recent bills that have been proposed, the first one being that Digital Commodity Exchange Act, which was kind of proposed back in April, as well as that Responsible Financial Innovation Act, which was introduced in June. Both recommended that the CFTC have greater authority over the cryptocurrencies and the digital asset market. So this is kind of maybe Gary Gensler trying to kind of create that bridge in case the bills do pass, and it gives it to the CFTC that the SEC still has kind of an in on some of the regulation that's going to come. When we look at regulation, I think it's kind of depending on who you're talking to, a sticky subject when it comes to the cryptocurrencies. Personal opinion of mine is that we need that regulation to some degree before we're going to be taken seriously by a lot of the large institutions. I think that they're probably waiting on the sidelines to see which way the ball rolls before they kind of dive in head first. So let me know in the comments below what you think. If you have a preference, CFTC or the SEC, as far as regulating cryptos and digital assets. And we'll just kind of have to wait and see how it all plays out. Second story that we're going to take a look at is this one coming from Cointelegraph as well. So this is about Blockfi, which I spoke about Celsius Network previous video. Blockfi is kind of similar in that it's a custodial entity that you can have and hold Bitcoin, Ethereum, different crypto assets on, and they'll pay you a yield on it. But recently we've seen with some of these different businesses and services that they're having difficulty giving people their assets back when they go to withdrawal, because while they're holding these assets, they're having some positions, or maybe they're taking those assets and over leveraging them in different things. And so it is kind of risky in that regard. And so recently Blockfi stated that FTX, which is kind of a major cryptocurrency exchange, had agreed to secure $2 million revolving credit. So what that tells me is that Blockfi needed some cash, and FTX was able to supply that to them. The question is why they needed that $250 million. Now, it's a pretty big chunk of change. Previously, I held some assets on Blockfi. Since kind of taking them off just out of kind of conservative approach. The last thing you want is for Blockfi to do something like Celsius, where they kind of lock out their customers and say, hey, you can't withdraw your assets right now. We're having trouble due to let's see what they have here. Blockfi does not comment on market rumors, so they haven't put out any official statement, just saying that they did secure this $250 million loan. This story will kind of lead us to our next one, which is from let's see if there we go, Celsius Network. So Celsius Network is similar to Blockfi. They hold assets, give you a yield on them. However, earlier in June, they completely locked out all their customers and said, hey, we know you were holding your assets here. You can't withdraw them right now. And I think that the statement they said was that it was due to market turmoil. But since then, some other information has come out. They had some over-leveraged positions, and that they are not doing the best financially. So this story is talking about Goldman Sachs, one of the largest financial institutions in the world, has started the possibility of purchasing assets of an embedded crypto lending company, that being Celsius. So the question is, if Celsius Network gets bought out by Goldman Sachs and Goldman Sachs purchases all the assets that they have, what happens to all the people that were holding their assets on Celsius Network? Are they going to get them back? Are they, just SOL? A lot of it's kind of up in the air, and we're kind of waiting to see how things are going to pan out. I think I mentioned it yesterday, but I think this kind of highlights if it's not your keys, not your crypto. So always try to keep that in mind when you're looking at these different services. I personally will not be using them going forward. Been kind of a learning lesson, I think, for a lot of people in the industry. Thankfully, I wasn't burned by this or have any money on Celsius when it happened, but definitely feel for those folks that did. All right, our third story. So this one always kind of, whenever you see these headlines, for me, I've been in crypto since 2017, so it's kind of numb to the number of times that I've heard people say, oh, Bitcoin's dead or it's going to zero. This story says China warns Bitcoin is heading to zero, but it looks on the bright side. Official Chinese national news media outlet warns readers that Bitcoin could go to zero in value in order to dissuade them from investing in using cryptocurrencies. So the South China Morning Post reported on Wednesday that the Chinese national news media agency Economic Daily had issued the warning about the largest cryptocurrency by market cap to further dissuade citizens from adopting the use of crypto. And one thing to keep in mind is that Bitcoin and cryptocurrency transactions is actually currently banned in China. I'm not sure exactly when they officially banned it. It was, if I'm not mistaken, over the past year, but it's not the first time that they've kind of had a official stance of saying that it's not allowed. So when we look at how many times Bitcoin has died, we'll jump to this graph here, and this is let's see what the website is, bitcoinisdead.org. So this is just a website that someone threw together with a chart showing how many times Bitcoin has been proclaimed as dead. Let's see if they have an official count. I don't see it on here, but it does have the dates and kind of the price of Bitcoin when it was stated that it was dead. So the first one was in October 15th of 2010. Bitcoin was 11 cents at the time. And this was a publication by the Underground Economist. I'm not familiar with that, but the title of it was Why Bitcoin Can't Be a Currency. We'll go down to the bottom. We're not going to go through all of them, but we'll just go to kind of these first page ones. November 22nd, 2013. Bitcoin was $747. How Bitcoin is going to fail and why it is not a good gold equivalent. So by Foster's Down. Let's see if we can get some Bloomberg. All right. November 20th, 2013, Bitcoin was $572. Bitcoin is still doomed. So the moral here is that people have been saying Bitcoin is going to die and that it's going away. But none of these stories have really aged well, right? I mean, can you imagine buying Bitcoin at 11 cents, $700? I think the most, let's see, before the last bull run in 2021, we had let's see if we've got one here. So this is from BTC has no utility. This is from CoinGeek in 2020, so fairly recently. That time Bitcoin was about $10,000. So you can see kind of with this graph, everyone's saying Bitcoin's going to die. It's usually when there's kind of a downtrend or it's gone down a little bit. But then after the next Bitcoin halving, usually we see another bull run and it goes higher and kind of sits at its previous all-time high. So previous all-time high in 2017 had it right around $20,000. This last bull run in 2021, went up to, I don't know, 69, almost $70,000, and now it's sitting down below it. It's 20,000 mark. I think it's 21K we said today. So is it dead? Probably not. Is it going to go higher? Probably. We'll just have to see though. If you guys like the video, make sure you like, subscribe, hit the notification bell so you're aware when the next one comes out. Till next time.